We order the home appraisal because that's a super important step. The appraisal is a protection for you as well as for the lender. See, if you're buying a house for $400,000 and the house appraises for $350,000, you can't get the financing on it. That protects you and that protects the lender. You have an out to say, hey, I don't want that house. It's not appraising where we thought it would be. Now, an experienced real estate agent, he knows where it's going to come approximately, but he's not a licensed appraiser. It's very much a science having an appraisal. And the appraisal is basically going to go to the lender, and he's going to evaluate it. The underwriter is going to evaluate that as part of the approval process. But before we even get the appraisal, because that could take a week to two, depending on how busy the industry is and the appraisers are right now, we are going to package your file. And what that means is we take your application. We're going to take your credit report. We take the DU approval. Remember, we ran it through the website, their software, to evaluate that. We take your pay stubs, your bank statements, your 401k, your IRA, your documentation, your proof of who you are, your ID, everything. We're going to package it. We have a certain formula for how we do it, and we are going to send it to an underwriter. We don't even have the appraisal back, but we're hoping to get an approval back subject to acceptable appraisal. So what the underwriter's job is to do is to evaluate everything that the loan officer and my staff have put together. They're going to evaluate your bank statements. How much is in there? Does he have any insufficient funds? Did he bounce checks? How does he use his money? They're going to look at those things. They don't overlook at them, but they are going to look at them. They're going to look at your W-2s and your taxes and your pay stubs, and do the numbers line up? Are the debt ratios, do you have too much debt, or are you in line with where you should be based on your income, including this new house payment? They're going to evaluate all that. They're going to evaluate the credit. Is the credit good enough? Does the credit meet the guidelines? There's 100 different things that they're going to look at. Now, my job as the loan officer, I always tell people, and they laugh at me when I say this, I am kind of like a defense attorney. My job is to prove that you meet the guidelines. And I have to forensically prove it on paper. If it's not on paper, or today electronically, it doesn't exist. So, common sense, there's no such thing as common sense. Prove it or it doesn't exist. That's my job, to build a case on your behalf. The underwriter who is sending that file to, they're making believe you and I are lying, cheating, and stealing, and putting together fraudulent documents. They're looking for everything to make sure that you meet that guidelines. Because see, if they do a loan and you don't meet the guidelines, guess what? Fannie Mae, Freddie Mac, HUD, who owns FHA, the VA, say, hey, you buy that loan back. Yeah, write a check. You buy that loan back, because we're not insuring it. So no company wants to deal with that. They would lose a fortune if that happens. So that's why they're going to ask for and over ask for documentation and proof of every single thing. So the underwriter is judge, jury, and prosecuting attorney all in one. They're going to make believe that we're lying about everything. Prove it, prove it, prove it, prove it. And that's their job. See, their job depends on it, because if they have a high failure rate or foreclosure or default rate, the lender is going to look at them, and there's reports on these guys, and say, no, I don't think I want this person working for me anymore. So their job and their family's livelihood depends on it, and that's why they're going to ask you for all this documentation. Sometimes people feel it's intrusive, and it actually could be. That doesn't really make a difference as much as let's make the end justify the means. Let's get you in your own house. Okay, you got the approval. Congratulations. We're excited to make this happen for you. I think that's a big deal. But it comes with conditions. Almost every loan comes with conditions. The underwriter is literally going to ask for certain paperwork. They're going to say, hey, prove to me that that deposit check cleared your bank. and prove to me that, hey, send me the last pay stub, we're missing a pay stub, or something happened here. And hey, write a letter explaining this address that's on your credit report. Hey, there are 3 inquiries on the credit report. Explain what they were. Did you open new credit? So there's little things like that that they are going to ask for. Very normal type of stuff, but you need to do this to meet what's called the conditional approval. And in the meantime, your appraisal has probably come in, which we've also submitted. So once we meet all the conditions, the lender is going to issue what we call a clear to close. And that's an exciting news because you'll be closing on your home soon. The next step is the closing disclosure, also called the CD. And what the closing disclosure does is it evaluates all the numbers. And these numbers are going to be the real numbers. There's very little that could possibly change in these numbers from the day you sign this. You're going to get the closing disclosures. You're going to work with these numbers. It tells you this is how much money you need to wire to escrow or to the attorney's office. And you have to sign those documents. Now, once you sign those documents, what's going to happen is the clock starts ticking. You are not legally allowed to sign the closing documents. Don't confuse them with the closing disclosures, which you just signed. You are not allowed to sign the closing documents for 3 more business days. Sundays do not count. Holidays do not count. That's just how it works. So 3 days later, you sign the closing documents, and usually, depending on the situation, the company, and the guidelines and whatnot, usually within a day, sometimes 2 or 3 days. Some companies and states will allow them to even fund the same day. So usually within a couple of days, you are going to fund the loan. That means the bank has wired the money for your loan so that we can pay off the seller, and now you become a homeowner. But there's one step left. It has to record with the county. Once all the numbers come together and the funding is there, the title insurance company is going to say, okay, everything lines up properly. Okay, record that loan. And they go to the county and they record the loan. Congratulations, you have fired your landlord. You've gone through this whole video and you've gone through all the steps and you fired your landlord. So if you are ready to do that, reach out to us. You can always go to my website. My website's real easy, fireyourlandlord.info. Click the apply button and we'll help you get started. And if you got something great out of this video, if you enjoyed it, if there's something beneficial, do me a favor, give it a thumbs up, hit the like button, and you can always subscribe again, and I'll help you with anything you need. You'll get to see everything as it comes forward, all the new videos, all the new changes, every law. There's new loan limits, and there's new laws and rules that come about. So feel free to reach out to me, reach out to my staff. We are happy to help you fire your landlord, or maybe we're going to help you fire your neighborhood and move up to a new one. So whatever it is, this is Chris the Mortgage Pro saying, hey, we're here for you. We got your back.